Imagine bringing
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a trader, trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. We're going to see if we can get through an episode of the Price Action Recap without anybody fondling themselves. We got light-skinned Deborah in the building. We got Yolanda in the building. What's going on? We got Hidden Learning Share. Trying to be the number one top fan. We got Kim in the building. We got Felicia in the building. We hey, I see more numbers than I see names, but that's all the names I see, so that's all the names I'm gonna say. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just a big spot if you don't have Hablo Espanol. And you're in tune to another episode of the Intraday Price Action Recap. This episode of the Price Action Recap is being brought to you by the Smart Money Manuscript. Yes, the Smart Money Manuscript is a course that I put together. It's got to do with everything that I've talked about on my YouTube channel. If you're a beginning investor, long-term seasoned veteran, beginning trader, long-term seasoned veteran, it's something in there for everybody. $69.99. First link in the description below. Look out for you, boy. I appreciate it. Help put the kids through college. It'll help me put my kids through college. If you like to pull up and join us on Zoom, there's a link pinned to the top of the chat. No, you cannot just join automatically. You will go into a waiting room where I have to allow you entry into the room because we've been having an issue with someone pulling up and doing some very not so nice stuff on camera, some very offensive stuff on camera. Now, if Price did anything today that caught, I keep hearing something click. Who was that? That's Yolanda. Mute you. All right. I kept hearing something click. It was driving me crazy. All right. If Price did something today that caught you off guard, right? I didn't send out the bat signal in the I didn't send out the bat signal. Who's DMing me? Oh, all right. Yeah. I responded to somebody earlier. All right. Let me send out the bat signal. I was just reading a DM, y'all, so I'm back. Let me send out the bat signal. If I could, I got so many different channels I'll be looking through. All right. Where'd that little box go? Oh, there it is. Okay, man. What's going on, Tish? How you doing? Let's go ahead and get into it. Like I said before, if Price did anything that caught you off guard today, there's a link pinned to the top of the chat that'll allow you to pull up on Zoom. I'll have to let you into the room, but once I let you into the room, you'll be able to unmute and ask your question. Looking at Price Haction. Okay. Here we are. This is our as we talked about yesterday, we were saying that we was up here in the premium of our dealing range, our weekly dealing range, right? And then yesterday was our daily dealing range. And then today, we were still inside that same bearish dealing range that we had created on Friday, right? And we had come back up to like equilibrium. We were just kind of hovering there, right? See, we hovered there on the way up, hovered there on the way back up again, right? We was kind of hovering around there. And we had made our way up and was hanging out in the premium. Then we started today's price action here. We're still hanging out up there in the premium. And then going to the New York session, we dropped down, right? I shared a screenshot inside the Discord. I don't know if you all saw it, right? But it was just a reminder from me to you to Just stay quiet and do the work. Put this over here. It's crazy how y'all can't see this box, but it be like all up in my way. Like right now, what y'all see over here on the side is a bunch of names. Y'all see a bunch of names over there, right? And my square up there on the top, right? Let me turn on my fancy dancy, right? So looking at my fancy dancy, y'all, I got to move this out the way. Jim, right? Right here is the bottom of my square that I'm sitting in, but there's a big white box there with like the participant names so I can see the people that's in the waiting room if anybody tries to come up, but y'all can't see that. But that be blocking stuff on my screen and I have to keep moving it around. Like, and if I click here, you see my fancy dancy got smaller. I'm moving the box. I just moved the box to that side of the screen, right? And then it be in my way over here. So then I got to click on it and I got to move the box to that side of the screen. And it's like it be driving me crazy. I know y'all don't care, but this is the struggle that I be going through on the back end. Okay. But I shared this Seawalk trying to come in. If something go crazy, y'all just know it's Seawalk. If it start going crazy right now, it's Seawalk. All right. Every person that come in, I'm announcing who it is. So if we see your DSO running across the screen, we know who it is. All right. So screenshots here. Don't nobody be caring about my posts. Right. Don't nobody care about my posts. I don't know why I waste my time posting stuff in the Discord. Right. I just said, good morning. Remember, stay quiet and do the work. Right. And if I blow this up and get this little box out of the way that I was telling y'all about, right? Who know what this is down here? Where I got the little eyes and the man whispering. That low right there. Who knows what that low is right there? Huh? And why am I?
That's that PM afternoon session low.
Yes.
The regular from regular trading out.
Yes. That's yesterday's low from the PM session. All right. That's yesterday's low from the PM session from regular trading hours. Right. And we're coming into today's New York session, right? And what do we say on the pop-up live stream that we was doing before that idiot made me hang up on YouTube and then we went private in the Discord? What do we say when we're moving into a new New York session? What's the first liquidity we look at? Or what's the first liquidity we want to take a note of? We want to have this on our radar. Mm-hmm.
Previous session.
Previous session or previous? Got a previous
session.
The previous session would be what?
The previous New York session.
There you go. The previous New York session is the first liquidity we want to put in our mental, right? The previous New York session. That's the priority when we're going into the New York session, right? And then once we identify the previous New York session, then we start identifying the previous sessions based off of if it started going crazy, Avery just showed up, right? Once we get the previous New York session liquidity in, right? And we're looking at whichever one, it can be the morning, it could be the afternoon, but you start latest first. If you trade in near the morning price level, you're looking at the morning. If you trade in near the afternoon, you're looking at the afternoon. Whatever on the chart, you're looking at what's obvious, the obvious liquidity that you're trading near. right? And you want to keep in mind those levels of liquidity. Okay. Then you start looking at your previous Globex sessions in order: London, Asian, you know what I'm saying? Whichever one you're trading in between. If you're trading in between, if you're trading in between the London range, you're looking at the London liquidity. If it go crazy, Marco just came in. If you trade in near the Asian range, you're looking at the Asian liquidity, right? So looking at the New York regular trading hours first. That's the first liquidity you want to note, right? And then the Globex liquidity. But you're always putting that emphasis on that New York liquidity, right? Even if you trade into the Globex liquidity, you always want to keep that emphasis on that New York liquidity. Okay. Why is that? Who want to take a guess at why that is? And if we see something crazy on the screen, it's Venus' fault because Venus just came in. Why is that? Why do you want to keep that emphasis on that New York liquidity? Don't overcomplicate it. It's very simple. We say it all the time. Why do we want to keep that emphasis on the New York liquidity? Because of stock market participants. Screw the participants. You're on the right track when you say stock market, right? Screw the participants. You're in the arena thinking in the terms of stock market, right? You're in the arena. All right, come on. Somebody talk to
When
me.
the stock market is the normal business hours of the stock market.
Okay. You right there. You just you swung and you hit it, but it was a pop fly, right? It was a pop fly. And we won't take it out the park, right? You in the right thing when you talk about, you said it's because it's the regular hours. But why is it important to the indexes that we're trading? Because 3 to 5 is regular hours for somebody. 7 to 12 is regular hours for somebody. Why are we focusing on that liquidity during the New York session? That 9 to 12 or that 1:30 to 4. Why is that so important? All right. You hit it. You hit it when you said that's the regular hours, right? But why is that so important?
Because that's when we have the highest participation, no injection of liquidity, no. Okay.
You see that right there? What am I circling now?
In Q.
Okay. What am I looking at right there?
The S&P.
And what's that right there?
The YM.
Okay. And what are they?
The indices.
That belong to who?
The United States.
The United States.
Okay, yeah.
It's the US indices, and this is when the US indices trade. It's because they are the US indices. So we're looking at the liquidity that was left the last time these indexes were trading. Right? That's why we're looking at that. You know why that is? Because when you take away all of that Globex stuff, guess what you're looking at? If you come over here and just look at the S&P, that's what you're looking at right there. You're looking at the S&P. When you take away the Globex stuff on the NQ futures, right? If you put the NQ futures on regular trading hours, bye Joe. Bye Joe. Bye Joe. Is he a freaking genius? Is he a freaking genius? Is that the same thing? Oh my goodness. Right? So that's why you're focusing on that regular trading hours liquidity at all times. And you got to remember, you don't always have to hit your liquidity on the day or time you think is going to hit it, but that's the liquidity that you want to focus on first, right? That's the one you want to focus on. You want to understand where is that regular trade in our liquidity. So if price is bullish, my bad, Jim. Come on in here, Jim. I really wish, I really wish like I had somebody to do that for me, because I don't know how long people be sitting out there in the waiting room. Um, I really wish. What was I saying? Oh, because since it's the U.S. indexes, right? You want to be aware of the liquidity. So if I'm bullish, right? Just say if I'm bullish, right? And I got buy side here and I got sell side here and I got internal sell side there, right? All of this is regular trade in our liquidity, right? So if I'm bullish and I drop down and sweep out this sell side right here, when it start going back up, right? This isn't my target. My target is there, right? But when we go to the NQ, right? When we go to the NQ, that's the right. That's the high right there. That's the same high that I had annotated, right? So that weekly high right there, that same high that we had annotated. Now, when I go back to electronic trading hours, right? It's way back over here. You see what I'm saying? It's way back over here. And it's now I've traded above it outside of the New York trading hours. You see what I'm saying? I traded above it outside the New York trading hours, but on regular trading hours, I haven't touched that yet. You see what I'm saying? So now, if I'm bearish, right? If I'm bearish and I see that we have swept this liquidity outside of regular trading hours, right? When we come into the new trading hours, remember, we already traded above this, right? And if we open up here, right, I'm still watching that high right there, because during regular trading hours, I haven't swept that yet. Do I got to go back above it? No, I don't, but I'm still watching it, because during regular trading hours, I haven't swept that. I haven't manipulated that high to start trading down yet. Okay. We want to be like Ant-Man. We want to look through the candles to very specific price and times, time and price. What's going on, E-Rock? Man, E-Rock, I ain't seen you in a month of Sundays. It's been a long time. I shouldn't have left you without a wait a minute. I ain't leave you. You left us. Get off my live. All right. Hold up. Now I already let Lump in. Lump, I ain't gonna just keep on. I ain't gonna be picking your old big old behind up off this floor. You better stop all that falling. uh, who know where I get that from? I ain't gonna just keep on picking your big old. Who know where I get that from? Y'all know how I do. I can't help it.
German daddy, man. German daddy.
Cletus said, I ain't gonna just keep on picking your big old. Oh man. Okay. All right. Very good. Regular trade hours. We want to focus on regular trade hours. Now, let's get back to the price action recap. Everybody understand that. Everybody understand why. Everybody understand why we focusing on the regular trading hours liquidity, and we want to keep that in the back of our mind, right? Now, going back to the screenshot that I shared here, right? If you notice, we traded back down here into this regular trading hour sell side liquidity after manipulating the pre-market buy side. Okay. After manipulating the pre-market buy side, we had a whole bunch of choppity slop, right? let's go over to the charts. Okay. So what time frame was that I was sharing? 5 minute. All right. Let's go to a 5-minute chart. All right. Let's go over here. I want to annotate this right here. All right. You say, Tim, why you picking that low right there? All right. Somebody give me the time frames that we're looking at with the New York morning and New York afternoon. Somebody give me the time windows. Give me the time windows that we're looking at for liquidity for the New York morning and the New York afternoon. Somebody give me the time windows that we looking at.
Seven, you talking about for the pre-market or the whole session?
The regular trading hours liquidity. We looking for liquidity during the regular trading hours. What's the time windows that we looking for? The highest high and lowest low for the morning, the highest high, lowest low for the afternoon. What's the time windows we looking at?
I know. I mean, you're not the opening range. You mean that whole little morning session? Regular trading hours, 9:30 to noon for the morning.
Okay, 9:30 to noon for the morning. So for the AM, we're looking from that's 9 a.m. I got to get on 9:30 to noon. Okay, so 9:30 to noon. And then what's the afternoon?
1 to 4.
Close enough. 1:30 to 4.
1:30 to 4. Okay.
Yeah. So the afternoon is pretty much easy. It's the afternoon kill zone. 1:30 to 4. The morning, it's 9:30 to noon. So it's the New York session part of the morning kill zone. Because the morning kill zone is from 7:30 to noon, but it's just the New York portion of the morning kill zone, which is 9:30 to noon. Okay. So when we're coming into a new New York session, and we come over here to Tuesday at 9:30 a.m., right? We come over here to Tuesday at 9:30 a.m., right? We put on our Ant-Man glasses, right? And you want to get used to seeing it like this right here. But the easy way to do it is when you come into 9:30, just flip the thing to regular trading hours. And then look at here. Oh, golly gee willikers. Look what we got highlighted. All right. The 9:30 to noon, and then the 1:30 to 4. We got the morning, we got the afternoon. If you just flip the regular trading hours, that's just like putting on your Ant-Man glasses. Boom! Now you can see your highest high, lowest low for the morning, right? Your highest high and lowest low for the afternoon, right? So that's why we marked that low right there, right? That was our that was the lowest low regular trading hours PM. Right. Copy that. All right. And then when we open up at 9:30, well, Tim, why didn't you mark out the regular trading hour PM high? Right there. We're above the regular trading hours PM high. Bless you, I think. I heard somebody sneeze. I don't know. When we open up at 9:30, we're right there. Right. So we're above the regular trading hour PM high. Right. So since I'm trading here, right, I'm looking for the buy side I haven't taken yet, which is there. Right. That's the highest high. I'm looking past the PM into the morning. Right. So there's my regular trading out, which is the daily high. Okay. So now we got our sell side and our buy side marked out for regular trading hours that we're trading in between. Okay. Okay. Got it good. Now that we have that marked out, right? Coming into 9:30, you see here that we open up, we trade up here above. Oh, let me mark out my other stuff too. Now, I forgot to mark out this stuff here. This is important too. Right. We're going to mark out what time going into. We've identified our regular trading hours liquidity. We got it in mind. It's our daily high, and it's the afternoon low at 23,760 even. Now, what other liquidity that we're looking at? Not the prior session, but what other liquidity are we taking a note of going into 9:30? What time do we start looking for liquidity?
7 a.m.
7 a.m. Right. So we're marking out the pre-market start 7 a.m. and we're looking for at 9:30. Right. We're looking for our highest high and our lowest low. Right. Going into 9:30. So that's the highest high there. All right. I guess I could just use a ray. All right. I'm going to do a dash line on this one here so that we can see. And I'm going to thicken these up a little bit so we all can see a little bit better, because it's easy for me to see because I'm sitting here in front of the computer, but I want to make it a little easier for you all to see. God dog it. All right. High is high. And then low is low. Going into nine 30. All right. So now I can move this out of the yeah, I'll move it out of the way. All right. And then I'll just mark the 9:30 open like this. I smell some paper burning. Y'all hold on for a second. I smell some paper burning. Or that. Do you smell some paper burning? Do you smell some paper burning? I don't smell it out here. It must be in here with me because I smell some paper burning. Yeah. Yeah. I wonder if it's this fan. Hold on for a second. Y'all hold on for a second. I don't know. Don't know what that is. I don't know what that is. I don't. When I walked outside of the room, I didn't smell anything. So I don't know. Maybe I don't know. Maybe it's this fan. Maybe it's a combination of different smells. I got a candle over there, a plug in over there. I don't know. Might be a combination of smells messing with me. I don't know. Hopefully, I ain't having no stroke. And they say you smell burning toast when you have a stroke. Man. All right. So we we open here at 9:30, right? Just below midnight. Right. We open here at 9:30, just below midnight. And then um we get an immediate rebalance there. Let's see which way we go first. Let's drop down to a 1 minute chart and see which way we go first so we can understand price. All right, so 9:30. All right. So we dropped that. Looked like we dropped down first. That 1 minute count ain't giving me much. Let's go down to 5 second. Okay, so on the 5 second, we see that we rally first. All right. So on the 5 second chart, we see that we rally first. We rally first and go up there to the buy side. All right. Now, going back to the 5 minute chart, put the meat back on the bone. All right. So at 9:30, we open up and we immediately rally to take out the pre-market high. All right. So immediate rally, take out the pre-market high. Once we rally, take out the pre-market high. Right. We come here, we drop down, right, below the order block, push back up above the 9:30, open again, above midnight, right? We pop up above that high, but we don't take out that high, right? And then we drop down and get a break in market structure there. Then we come back here, right? We come back up here, get an immediate rebalance there, potential immediate rebalance on this 5 minute candle, watching that, right? Then the next candle, right? We come down, take out the opposite end of the pre-market range. So we open up, take out the buy side, right? Come down, take out the sell side. Now, when we come down, take out the sell side, we look like we're stretching towards our regular trade and our low, right? We're coming down with some nice authority here. Then we stop, pull back up, right? Closing below that low, and we open up here, and then we rally all the way back up here, right? And what time are we doing this at? Let's go in and see what time we're doing this at. Come right here on this candle here, over to that candle there, right? That bar is our macro window, right? And that right there is our macro window. So when did we attack that liquidity right there? During our macro window, right? What is the algorithm coded to do during the macro window? It will engage liquidity or imbalances, right? Imbalances that have not been touched. I ain't writing all that out, right? So if you got liquidity or imbalances that still need to be repriced or engaged, that's what the algorithm is going to seek. It's going to spool towards it during the macro, right? Will it spool directly on every time frame, every day, every macro, right? No, it's going to happen on time frames that you are not even aware that it's happening sometime, but it will be looking for liquidity and imbalances. So here we come down, like we said, breaking market structure, right? Immediate rebalance, come down, engage the liquidity, appearing to be heading toward our regular trade and our sell side that we had annotated, right? Back here, when price was up here in a premium, right? It was up here in a premium. It was in a premium of our bearish range there, our latest expansion leg, right? And we were right around equilibrium of the overall expansion leg. I mean, the overall bearish dealing range. Okay. We rallied back up, came all the way up into a premium of the overall range, taking out internal buy side liquidity, right? Key algorithmic time-based liquidity, right? And then we came down, extended the bearish dealing range more, right? Extended the bearish dealing range more, retraced back up, right? During this macro window after engaging sell side, right? Retraced back up with a very deep, unnecessary retracement. Why is that? Because we're dealing with a whole bunch of divergence. We had divergence going on today. The NQ and YM just wasn't on the same sheet of music again. But if we look very, very closely, right? Even though it's getting on our nerve with a bunch of manipulation, right? What is it doing? Price comes all the way back up here, right? Back above the 930 open, back above the midnight open, right? Back up into the premium, right? Because this is equilibrium right here. Back up into a premium and sweeps out some internal buy side liquidity, right? Inside this rejection block and does not take out that high right there, right? Then once we do that, we come all the way back up here into a premium of the entire move. And then we drop it like it's hot, coming back down to our regular trade and our sell side liquidity that Ant-Man saw at the beginning, just like this right here, right? We came down, traded back up into a premium, took out buy side liquidity, traded down, retraced back down into the sell side liquidity, just like that, right? So that's why you always want to keep in mind the regular trade and our liquidity when you're looking at price. Now, is it going to just be that obvious and that beautiful every single day? No, it's not. But you always want to understand where that regular trade and our liquidity is, right? When you're going into a new New York session, right? And then if we look right over here, this candle right there, where does that candle right there trade into? Who knows what that candle right there traded into right there? What did we say this was right here?
Previous day high.
Not just the previous day high. What did we say? Well, we first came in. What did we say the high was right there? Not just the previous day high. What did
It
we
was
say?
a previous week high.
Not previous. What
No?
did we say at the top of the that when we put on our Ant-Man glasses? What did we say that was? When we drew this box?
Oh, that previous AM high,
Yep.
session high.
When we started out the morning, we was right here. And that was our regular trading hours low. That was our regular trading hours high. We let the algorithm establish a range. We engaged the sell side first. Got a shift in market structure. And we traded back into the opposite side of the range. Oh my goodness. Oh my goodness. Oh my goodness.
Well, Tim, I know it's
Oh,
it's
you're playing.
Oh my God. 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 Oh my
thought you was gone. Yo. Y'all hold on for a second. Y'all hold on for a second. I'm back, y'all. Sorry about that. I just scared my wife half to death. She told me she was going to this. She told me she was going to the stove, and then I'm back here being me, and I hit on the desk, and I was like sliding out the chair, so they just heard a big bump, and so I couldn't hear her calling me, and when she come in the room, she see me sliding out the chair, so she think I'm back here dying or having a heart attack or something. So, but anyway, um, what was I saying?
You were saying you waited for it to engage one side of liquidity and it took the opposite. So it's kind of like what you had been teaching us before with the pre-market high and low as well.
Oh
So
yeah, oh yeah.
now we add that on. That's wow. Okay.
Time and price is fractal. Time and price is fractal. All right. So we say this over and over and over and over and over. Right. How many times y'all hear me say time and price is fractal? How many times y'all hear me say the algorithm does the same thing over and over and over? Right. Even when you're in high resistance conditions, you can't stop the algorithm from being the algorithm. Right. So it don't matter if you're trading within an hour, if you're trading within a session, if you're trading within a week, if it don't matter what your time frame is, right? If you allow the algorithm to establish the dealing range, engage with liquidity, and then look for the signatures, is it reversing to go to the opposite end, or is it continuing the trend? Right? What is it going to do? Right? Are we in a buy program? Are we in a sell program? Right? So hopefully it's starting to sink in when y'all hear me say over and over and over and over and over. Don't worry about what's the best PD rate. Don't worry about is fair value gaps better than breakers. Don't worry about, oh, I can't see mitigation blocks. Don't worry about none of that. If you understand order flow and price delivery, the rest of it are just fall in place. Because if you understand order flow and price delivery, you can trade OTE. When Michael taught OTE ain't have nothing to do with any PDA rate. He didn't teach not one PDA rate when he taught OTE. Right? It was all based off order flow and price delivery. Once the algorithm does this at a certain time, you map out that dealing range and look for that retracement back into that dealing range based off of if you're bullish or bearish. All right. I don't know, man. Hopefully y'all got something out of this. That's all I got. Y'all got anything for me?
Never good one, Tim. Never good one.
What's the significance of the midnight open for you? How do you use it? The significance of the midnight open is that's true day open. That's the true day open. And it's just like every other opening price, like an opening price on a candle, opening price on it's the open price for a true day. So if price is hovering around the opening price, right? That's a sign that the market really ain't showing you what it want to do in either way, right? If it's constantly going back to that opening price, right? You're probably gonna be stuck in some consolidation or some high resistance. And then once you identify that, you can use it to your advantage. You can trade back to the opening price, right? But that opening, you always want to know your opening price. You want to know your open, high, low, and close. Those 4 pillars. You always want to know your 4 pillars, the open, high, low, and close, because the algorithm is going to refer to those 4 pillars. Right? You got a 6:30 open, you got a midnight open. Right. I don't mark the 6:30 open because I got the new day opening gap there, but I marked the midnight open. So I know where the 6 p.m. open. I know where that 6 p.m. open is, and I know where that midnight open is. Right. I know where that daily high is. I know where that daily low is. Right. I know where that daily close is because I got my new day opening gap marked. All right. Even know where the New York PM close is. If you mark out the opening range gap, you can see that PM close. All right. Y'all kind of notice what all these PD arrays, they be hovering around. They be got something to do with them 4 pillars. Because them 4 pillars, that's the most important thing in trading. The open, high, low, and close. That's all you need. Michael say that all the time. All you need is the open, high, low, and close. You don't need indicators. You don't need anything. Open, high, low, and close. Everything has an open, high, low, and close. Every candle, every session, every day, every week, every month, every year. Everything has an open, high, low, and close. It's just some things the algorithm has been so kind to just give us an easy way to look at it with intervals. Now, if they come up with something like a session interval, right? People have indicators that they make where you can go in and map out your highs and lows for sessions and stuff like that. But I don't be having time. To be looking for indicators. I just annotate it. Like Michael say, high touch over high tech. All right, man. I don't see nothing in the chat. At this point, I should be sounding like a broken record, skipping, saying the same thing over and 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 over. Is it starting to click yet? Is it starting to click? Are we starting to see the significance of the order flow and price delivery, not just in relations to the 23-hour trading of the futures, but also when you go from New York session to New York session. Right. Is the stuff that I reiterate on a daily basis, is it starting to make sense now? Is it starting to click? Clickety click, click, click.
Yeah, Tim, you drilling it in. And yeah, every day is man, I'm getting sharper and sharper by the day.
That's good. That's good. That's good. I hope everybody getting sharper and sharper by the day. Cause one of these days y'all gonna show and be like, hey, where Tim at? Oh, I think Tim is naked on the beach in Tahiti. Hey man, if this was your first time tuning in to Tim's Tidbit, you probably ain't here no more. Everybody else, gang, I appreciate y'all, man. If you got something out of this, share it with somebody else. They might get something out of it too. All right. Then this Saturday, the 13th, if you got the Smart Money Manuscript, is our first monthly Q&A session for the Smart Money Manuscript. Tomorrow is Wednesday, tape reading session with the Diamond members in Discord. And I'll see everybody else at 6 tomorrow for the price action recap. All right. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Garcia, a.k.a. Rania Grande. That's just big spot of you on Oblo Espanol. Y'all be safe on these trading streets, man. Gone.